All right, let's take a look at the markets as we are just about 30 minutes away from the stock market open. Joining me now with more is Jeffrey Roach. He's a chief economist at LPL Financial. Jeffrey, great to have you on the show this morning. And in what has been a very busy week of economic data, what are your takeaways?
Well, great. Good Friday morning to you as well, Kristen. A couple things that I think are noteworthy from the retail sales report. Number one, it was a tough month in January for auto sales. That was really pulling the numbers down. And then, of course, we also saw non-store retailers posting a loss for a very long time. That's important for me as an economist, financial markets economist, look at leading indicators and how the consumer is feeling. I think the non-store line item is pretty important, a great way to understand how savvy the shopper is and how price sensitive if they're going from department store sales to non-store sales. So those are a couple of things that I saw. As you highlighted, it was interesting to see upward revisions from last month back in December. But we already kind of knew that. Holiday sales was strong. And really the big story is a downshift in consumer spending going into 2025.
It's interesting because we heard from the Fed chair in his routine testimony, of course, in front of Congress, both the House and the Senate for 2 days during this week, Jeffrey, and with so much in focus from tariffs to the Fed's independence and, of course, the path forward for interest rates. The Fed chair did have a lot of questions to field that is. What does that mean, what we heard from the Fed chair, in terms of how independent that body will be going forward?
Well, I think there are some really comforting comments by Chair Powell in the last 2 days. So, of course, he first testified before Senate, then went to House Banking Committee. And what was ironic was there weren't a lot of questions on actual monetary policy, particularly on inflation and the dual mandate of stable prices and full employment. It was really more of a philosophical kind of argument throughout those 2 days. But I think markets will respond and continue to respond somewhat favorably. The Fed and the leadership of the Fed is committed to that independence, and that is certainly something that's comforting to markets.
You know, we've seen a lot of changes, of course, with DOGE, the Department of Government Efficiency, Elon Musk helming that, including with the Consumer Financial Protection Bureau last week. It's actually funded by earnings of the Fed. What is the future of that organization under this new administration?
Well, what's a little bit ironic is the CFPB, the Consumer Financial Protection Board, has been kind of an emotional conversation, controversial since its inception, which was the Dodd-Frank bills. So the Dodd-Frank bill and policy basically said, hey, this new bureau is going to be funded from the retained earnings of the Fed. The problem is the Fed doesn't have the money to fund the CFPB. That's somewhat ironic, and hence that was one of the reasons why it showed up as on the line items to strike off. I think overall, though, I don't know if it's fair to say, as some senators said, that, well, there's not going to be anyone looking to protect against businesses taking advantage of consumers. There are still plenty of regulators at the Fed. There's still a lot of scrutiny. And I think that there might be a little bit of a shakeup in the near term, but regulation is not going to go away if there's less money for the CFPB.
Let's talk inflation. We did get 2 reports this week, the consumer price index, the wholesale price data as well, and really some thoughts, even though both of those reads were hotter than expected, that the PCE index might be on the descent. That would be a positive, and of course that PCE is the Fed's preferred inflation measure. Based on those inputs, where do you see inflation heading?
Well, I do see inflation heading downward in 2025. In fact, I think we're going to be surprised to the upside. It's going to be a good report when we see annual inflation decelerate to 2.6 when we get that PCE deflator. Remember, not to get too much into the weeds, Fed prefers this price index because it accounts for substitution effects. The CPI is a fixed basket of goods, so that's always going to run a little bit hotter than the PCE price deflator. We're going to see that slowly approach the 2.5% number in the next couple of months, even decelerate a little bit below 2.5%. So I think markets have some some things to look forward to in the near future.
Tariffs, double-digit tariffs on some countries recently announced. President Trump pausing some of the expected tariffs that we anticipated, though, on Thursday. What does this mean for the economy?
Well, certainly the big question is how much will tariffs ultimately impact consumer prices? And that's a complicated question. It's not one for one. And we've talked, I think, Kristen, before, as I've been on with you talking tariffs. Remember, it's important. Businesses often bear some of the brunt. Foreign businesses often adjust, as well as currency markets often adjust enough to bear part of the burden of this extra tax we call a tariff. So it's not entirely clear how much the consumer is going to ultimately feel. Now, granted, some like appliances, for example, we knew that was a pretty hard hit industry back in 2017, 2018. But I think in this case, it's going to be a lot more complicated. I will say, just as an aside, when the Prime Minister of India was in the White House just the other day, we started to see India already respond a little bit and adjust in how they manage their tariff policy in order to perhaps maybe have India on the good graces of the current president. So a lot of uncertainty, and certainly markets are going to have to stay on their toes. Investors are going to have to stay on their toes as things adjust, perhaps on an hour by hour basis.
Yeah, we have certainly seen that play out here at the stock exchange. Jeffrey, thanks so much for joining us. Jeffrey Roach, he's the chief economist at LPL Financial.